While Bitcoin just pushed toward 109,000 Canadian dollars, Ethereum, Solana, and almost every other crypto actually dropped. How does the biggest coin go up while everything else falls? And more importantly, does that mean Canadian beginners should forget altcoins entirely and just go straight to Bitcoin? I'm going to answer that question today, but I'll save the most important part until after we break down exactly what's driving this. I'm your crypto compass. Let's get your bearings. In the next 10 minutes, I'll explain what Bitcoin dominance actually means, why it's been climbing to levels we haven't seen in years, and what it tells us about where crypto is heading right now. I'll walk you through the three forces driving Bitcoin's outperformance and give you a clear, practical framework for how Canadian beginners should think about Bitcoin versus altcoins in 2026. Stick around, because by the end of this video, you'll know exactly how to answer the question every beginner asks: should I buy Bitcoin or something else? Before we get into what's happening this week, let me explain a term you're going to hear a lot in crypto: Bitcoin dominance. Bitcoin dominance is simply the percentage of the total crypto market that Bitcoin represents. Right now, Bitcoin's dominance is sitting at around 58 to 60%. That means for every dollar invested across all cryptocurrencies, Bitcoin holds almost 60 cents of it. To put that in context, back in early 2021, Bitcoin's dominance dropped below 40% as Ethereum, Solana, and newer altcoins exploded in popularity. But over the last few years, Bitcoin has steadily clawed that share back. And right now, it's near its highest level in years. When dominance rises, it typically means one of two things. Either investors are moving money from riskier altcoins into Bitcoin, treating it like the safer crypto, or new money coming into the market is choosing Bitcoin over everything else. Right now, it's both. And here's where it gets interesting for Canadians. The forces pushing dominance higher this week are not random. There are three very specific reasons. Understanding them tells you a lot about how to think about crypto in 2026. Now that you understand what dominance means, let me walk you through each one. The first driver is fear, specifically fear of what happened to decentralized finance, or DeFi, over the last 2 weeks. If you missed it, in mid-April 2026, a protocol called Kelp DAO was exploited through a bridge vulnerability. Nearly $300 million was stolen, the largest DeFi hack of 2026. Investigators have since confirmed the attacker was North Korea's Lazarus Group. Now, here's what that has to do with Bitcoin. When DeFi protocols get hacked, it creates a cascade effect. Investors who were earning yield in decentralized apps pull their money out of smaller, riskier protocols. And a lot of that money doesn't leave crypto entirely. It moves to Bitcoin. The reasoning is straightforward. Bitcoin has no smart contract risk. There's no protocol to hack, no bridge to exploit. It's the simplest, most battle-tested crypto asset in existence. That DeFi fear is a big part of why Ethereum dropped over 3% and Solana dropped over 3% this past week. Even as Bitcoin pushed higher, capital is rotating from complexity to simplicity, from risk to resilience. But DeFi fear is only the first reason. The second one is even bigger. Last week, a company called Strategy, you may know it by its old name, MicroStrategy, announced it had purchased 34,164 Bitcoin in a single transaction. That's approximately $2.54 billion in one purchase. And this isn't unusual for them. Strategy now holds over 815,000 Bitcoin on their balance sheet, making them the single largest corporate holder of Bitcoin in the world. Their stated goal is to reach 1 million Bitcoin. Why does this matter for you as a Canadian beginner? Because when publicly traded corporations start treating Bitcoin the way they treat gold or treasury bonds, as a store of value, as a hedge against uncertainty, it changes the perception of what Bitcoin actually is. For most of crypto's history, Bitcoin was seen as a speculative bet. Now it's increasingly seen as a legitimate treasury asset. That legitimacy drives institutional investment, which creates a more stable price floor, which makes Bitcoin more attractive relative to smaller, riskier altcoins. And when you layer Morgan Stanley's new spot Bitcoin ETF crossing $100 million in assets in just 2 weeks, alongside Strategy's ongoing accumulation, you start to see why institutional money is concentrating in Bitcoin specifically, not spreading evenly across altcoins. This corporate and institutional accumulation is the second force. And there's a third, one that might be the most important for understanding where Bitcoin goes from here. Here's something most crypto content gets wrong. Bitcoin doesn't just move because of crypto news. It responds to global macro events, things like interest rates, inflation, and geopolitical tension. This month, the ongoing conflict between the United States and Iran, centered on the Strait of Hormuz, sent shockwaves through global financial markets. Every time ceasefire talks advanced, Bitcoin rallied. Every time they stalled, it pulled back. The same pattern played out in gold, oil, and the S&P 500. That is not a coincidence. Increasingly, institutional investors are treating Bitcoin as a macro asset, something you hold alongside gold and bonds, not just alongside Ethereum and Solana. Here's the detail I want you to hold on to. The Pentagon issued a warning this week that sustained closure of the Strait of Hormuz could push US inflation to nearly 6% by mid-year. That would force the Federal Reserve to delay or reverse expected rate cuts. And here's what that means for Bitcoin. Higher inflation historically benefits hard assets like gold, real estate, and increasingly Bitcoin. Meanwhile, it tends to punish speculative altcoins, which depend on cheap liquidity and risk appetite. So the same macro environment that is holding Bitcoin up is actively working against the broader altcoin market. That's why the divergence this week is so significant. 3 forces: DeFi fear, corporate accumulation, macro safe haven demand. Together they explain exactly why Bitcoin is outperforming everything else right now. But here's the question you actually came here for. What does this mean for you? If you're new to crypto and you've been wondering whether to start with Bitcoin or jump straight into altcoins, this week's market is basically a real-world case study in why Bitcoin is usually the right starting point. Altcoins, Ethereum, Solana, newer tokens can deliver bigger gains when markets are running hot, but they also come with more risk. Smart contract vulnerabilities, smaller liquidity pools, more price volatility, and, in DeFi specifically, hack exposure. Bitcoin has none of that complexity. It does one thing: it holds value and gains adoption over time. For Canadians specifically, starting with Bitcoin on an OSC-registered platform like Coinbase Canada gives you something genuinely valuable: peace of mind. Your Bitcoin is custodied by a regulated entity. Your trades are in Canadian dollars. Your tax reporting is clean and straightforward. You're not navigating unregistered offshore exchanges that FinTrack has permanently barred from this country. Now, and here's the answer. I've been building toward. This does not mean altcoins are bad. There are legitimate reasons to diversify into Ethereum and other assets once you have a solid Bitcoin foundation. The question is sequencing. Bitcoin first. Understand what you own, why you own it, and how to store it safely. Then, if you want to explore altcoins, you'll have the foundation to evaluate risk properly. For a Canadian beginner in 2026, starting with Bitcoin on a regulated platform is not just conventional wisdom. The data from this week supports it. Speaking of getting started, if you're ready to buy your first Bitcoin in Canada, I've left my Coinbase Canada link in the description below. They're one of the only platforms in the country with both OSC registration and an active C-Row membership application. And there's a sign-up bonus for new Canadian accounts right now. The link is down below. I want to be straight with you, because that's what this channel is built on. Bitcoin's dominance story this week is real, but it doesn't mean Bitcoin is a safe, low-risk investment. The same macro forces pushing Bitcoin up right now can reverse. If the Iran ceasefire holds and global risk appetite returns, you could see altcoins bounce sharply while Bitcoin consolidates. If the Fed signals more rate hikes due to inflation, all risk assets, including Bitcoin, could sell off together. These are not hypotheticals. They're the same forces that caused Bitcoin to swing between 74,000 and 109,000 Canadian dollars in the same month. The Fear and Greed Index has been sitting in extreme fear territory for most of April, between 15 and 25. That tells you the market is deeply nervous, even as prices have been holding near highs. That disconnect between sentiment and price is something experienced investors watch carefully. What this means practically: if you're considering buying Bitcoin right now, go in with a minimum 12 to 24 month horizon. Only invest what you can genuinely afford to lose. And do not let a strong week make you forget that volatility is not a bug in crypto. It's a feature you have to plan around. Let's bring it together. Bitcoin dominance has climbed to nearly 60%, its highest level in years, driven by three converging forces: DeFi fear from the Kelp DAO hack driving capital out of altcoins, historic corporate accumulation by strategy and major institutions, and Bitcoin's growing role as a macro safe haven during the Iran ceasefire crisis. For Canadian beginners, this is the clearest signal in a long time that starting with Bitcoin through a regulated OSC-registered platform is not just the safe choice. It's the strategically sound one. If this video helped you understand what's happening in the market right now, hit subscribe. My next video breaks down the altcoin question in more detail. When does it actually make sense to diversify beyond Bitcoin, and which Canadian platforms give you access to Ethereum and Solana safely? Coinbase Canada affiliate link is in the description. Use it for your first purchase and you'll get the Canadian sign-up bonus. It's the platform I'd recommend for a beginner starting from zero. And my question for you: are you currently holding Bitcoin, altcoins, or nothing yet? And what's been the biggest thing holding you back? Drop it in the comments. I read every single one.